What's up, guys? Welcome back to the channel. So today is going to be episode 144, and today we're going to take a look at exactly what happened with Tesla's earnings. So Tesla reported earnings yesterday, which was on the 23rd after close, and they did not beat the earnings per share. It was anticipated around 60 to 62 cents, and Tesla reported at 52. And as a result of that, the stock is currently down. As you guys could see, pre-market, it is down over 8%. So let's get into the summary of the video. So first, we're going to go ahead and just look at some data inside of Robinhood. Then we're also going to go ahead and take a look at some summary information as far as what's going on with the results of the earnings, particularly what happened on the call. And then we're going to go ahead and also take a look at an article that just discusses exactly what's going on with Tesla right now. We're also going to look at one particular key level on the stock in terms of direction. It is still pre-market, but we don't know where it's going right now, but it does look like it's heading down. So we're going to take a look at that. And then finally, we're going to go ahead and also take a look at playing a potential put based on the direction that the stock is going. All right, so we do have Tesla pulled up here inside of Robinhood, and as you can see, it's down 12% for the week. If we go ahead and just take a look, yesterday we had a couple of spikes, went up to 57. For the week it had a couple of spikes, 257. Another hit here around that same price, and then yesterday it also hit around that area, so 255. I actually played the run up on this at open, made some money, and then got out. And then obviously when it got around to 4 p.m., 3 p.m., it just started to slide, and then 4 p.m. it just kind of fell off the cliff. That's when the actual numbers came out that it was not a beat, it was a miss on earnings. And then after that, the call came out, it just kind of like consolidated from there. All right, so we're going to go ahead now and just take a look at exactly what's going on with Tesla. All right, so we do have some key facts pulled up here on the screen. All right, so it says Elon Musk predicts Tesla's value could hit $5 trillion from self-driving cars and sees potential for $30 trillion with humanoid robot assistance. All right, the next point here says investors are focused on Tesla's Q2 financial results, particularly the delay in the robotaxi event, 2024 volume guidance, China market share, and earnings per share estimate. So those were the things that they were looking at, and they were pretty much not happy. All right. And then it says here, finally, Elon Musk aims for Tesla autonomy, Optimus robot by 2025, advances in energy, creates Dojo supercomputer, Gigafactory Mexico delayed by U.S. election tariffs, and then Q2 revenue is up and EPS and the stock is actually down. So that just kind of gives you guys a summary of exactly what was going on. This article that we're going to take a look at now just kind of digs a little bit deeper into what's going on. All right, so this article here is by MarketWatch. It says, is Tesla's stock having an identity crisis? So if we scroll down here, it says automotive financials are weighing on Tesla shares Wednesday, but Elon Musk and many bulls are focused on the future potential in autonomy and robotics. So pretty much the gist of this article just says, hey, you know what? What's paying the bills right now is selling cars, and those numbers are dipping. But the analysts that are bullish on this stock are saying, hey, we got to look at the future. And the future is autonomy, right? So that's the robotaxi, AI, and then also the humanoid style robotics that they're focusing on. All right. So it says, to most people, Tesla's Inc. is a car maker, but the chief executive, Elon Musk, Tesla is an autonomy company focused not only on vehicles, but humanoid robots too. It says here, but what's Tesla to Wall Street? That's a question analysts are trying to unpack in the wake of the company's mixed latest earnings report, which followed by a 35-month surge. So for the month, I told you guys that in the last video, it was up like 35%. All right. Um, Shares are now down 8% pre-market on Wednesday. From the perspective of UBS's Joseph Spack, who is bearish on Tesla, the stock is not being priced on auto or arguably even energy, but on autonomy and AI. And that's a whole fact. You know, those $300 valuations, it's not on the sale of the Tesla cars. It's on the fact that this robo taxi is going to come in, swoop over, take over, give Uber some competition, and the fact that they see robots in the future. Having robots as personal assistants. Now Elon is saying, hey, this is going to be a reality as soon as 2025. We'll see. All right. If we scroll down here, right, it says, since AI and related efforts have payoffs that are much further out, SPAC noted that on earning updates, the realities of the business fall back to mostly auto, which is true. None of that stuff is really available at this point. It's all speculation. Yes, we know they're working on it, and Elon, I think, will eventually get it done. But right now, it's a car company. You sell cars, and as a result of that, SPAC rates the stock at a sell with a 197 price target. So that looks rough. All right. We scroll down here. Then it goes into what Dan Ives is saying here. It says, while margin weakness is weighing on the stock this morning, the next phase of Tesla's growth story is around autonomous, robo-taxis, and AI playing out for Musk and company. In our view, that vision is on the doorstep. All right. So Dan Ives is saying, hey, you know what? This is a lot closer than we anticipate. So pretty much the gist of this article just says, hey, this 300 valuation that these analysts are giving the stock, it's based on something that's not really here right now. The business at hand is still selling cars. And as far as that's concerned, Tesla is still faltering. All right. So they're behind on their numbers. And as a result of that, the stock took a dip. And then when the earnings call came out, it kind of just started like consolidating at that point. So right now it's exactly doing that. If we look at it here for today, just look at it. It's consolidating. It's just going up, down, kind of just like, this horizontal move. It's not really going up or down, but, when the market opens, we'll see what happens. All right. We'll see if, people start selling, and then if it starts to sell off, then we're going to obviously look at some key levels. So let's go ahead now and take a look at Tesla inside of TradingView. All right, so here we have Tesla pulled up in TradingView, and then these were obviously the levels that we were looking at before. If it started to move upwards, we had a high of 270, and as you can see, it did not beat on earnings, and then the call was kind of like mixed. All right, so now we have these key levels here. So pre-market, as you guys can see, it's currently around 225 and some change. All right, so if it starts to go down, first level I'm looking at is around 210. If it breaks 210, I'm looking for it to go to 200. So you could play puts, I would say, down to this direction. All right. And that's exactly what we're going to do now. We're going to go ahead and hop inside of Robinhood and just take a look at what the puts would look like if we decided to go either for the 210 or the 200 strike. All right, so here we have the 210 put pulled up on the screen. This expires this week. Volume is 21,000. Open interest is 8,000, and implied volatility is extremely high. Right, we go over and we look at the delta here. It says 0.07 and the theta is 87. Just bear in mind that these numbers are not exactly accurate because we're doing this pre-market. Stock market hasn't opened as yet. All right, now let's go ahead and see if we could take a look at what a 200 put would look like. All right, so we scroll down here because as we know, 200 is a nice round even number. And I have a feeling that this is going to be a psychological level. So here we have the 200 put. The volume is, let's scroll down here. As you can see, it's definitely higher. It's at 25,000. Open interest is significantly higher. This is about 10,000 more than the previous one at 18,000. And then the delta in this is 0.03 and the theta is 0.52. The delta and the theta, more importantly, will change once the market opens. Implied volatility is very high, but like I said, you look at the volume and you look at the open interest, you could see that a lot more people are interested in this 200 strike. All right, so let's talk about why I like to play the run up. You guys know, if you've been following me for a while, you know I don't like to hold over earnings. And the reason for that is you're taking a huge gamble. And just like with any kind of gambling, I would say 90% of the time, the house is going to win. All right. So if you're buying options before, earnings on Tesla to say, hey, it's going to go to X, you're pretty much trading with your emotions at that point. What I like to practice is playing the run up. So I told you guys about this a little over a week ago, which gave you enough time. And I explained to you guys, listen, you have a couple of days where you could play the run up on this stock, ride the momentum, and make money. You can be in and out, scalping, making money all the way up to earnings. But once it gets to that day, depending on how the market is and the momentum, I get out. I'm not playing anymore. I've already made my money playing the momentum, the run up to the momentum, and I get out. So here we have my plays for July so far. So I had a 253 call, right? Got in at paid 253, sold at 210. We have another one here, 235 call, bought at 315, sold at 495. Scroll up, right? We have a 281 here, right? Sold at 335, and we have another one here that we got. We bought at 213, right? This was on the 22nd. And then we sold for 411, and that was pretty much yesterday. And after that, I just got out. I'm like, I'm not taking any chances. So that's essentially how you want to play the run up. I would scalp it, especially if I know a stock has like a lot of momentum. I know a lot of people are gonna be pouring into the stock. You could ride that wave. If the stock has enough momentum leading up to earnings, you're always going to have people that say, hey, you know what? I think the stock's going to go up. You're going to start seeing orders pour in, right? You're going to see volume start going up. And what you will notice is up until, especially when it's like after close, right? Leading up to that day is when I start to pull back. At that point, I'm like, let me watch. I'll probably do like 1 or 2 trades that day, and then I pull back. All right. But essentially, that's how I play earnings. Now, people are like, oh, but you see, if you had held over earnings, look, it went up. And, I made this. Yeah, that happens once in a blue, man. A lot of times, you guys bag hold and you get crushed. That IV crush is going to kill you. By the time the market opens at 9:30, you're done. All your money is wiped out. Now, another smart way to play the run up is if you guys, let's say you have 10 shares, right? You'll get 10 shares or 10 options. Let's say you play the run up and you sell 8 and you want to leave like 2 to run, hold till earnings. You're still taking a risk, but at least you're not risking all your money. And then at that point, what I would do is I'd make sure that when I sell the 8, I have already recovered the capital that I put up, and I've also made some type of profit. All right. So that way, yes, you're still risking money. You're still putting money on the table, but you're not putting everything and you've already locked in your profits. All right. But that's it for the video today, guys. I hope you found this information useful. If you did, please consider subscribing. I make new videos like this every day, dropping gems that you could use along your investing journey. Please go ahead and like this video, but more importantly, share this video with a family member or friend. If you're interested in trading alongside me, meaning mirroring my trades, I've created a paid chat on Instagram. It's $9.99 a month. I post the trades that I'm interested in, and once I get into the trade, I'll also post a screenshot. All right. Thanks again for watching the video, guys. I do appreciate it. Y'all stay safe and have a blessed day. Peace.